In this video, traders, we're going to discuss what's the lowest risk way to test a trading strategy. Stay tuned. Hey guys, welcome to this question came in from a subscriber, much appreciated, thank you very much. Okay, so what's the lowest risk way to test a strategy? And he goes on to talk about longer term strategies, potentially where, you know, if you're going to trade them, I mean, let's just backtrack before we kind of get ahead of ourselves here. The obvious answer to this is to say, you know what, you trade a low position size, okay? And if you were day trading, that makes such perfect sense, right? You've got a strategy there, you already worked it out, whether you trade it on demo, you've back tested it, whatever, you've kind of observed it and put it together based on some of existing foundational strategy you've got that you know works. There's some tweaks. In that case, you can be a little bit more aggressive. It's just a brand new strategy, right? You come across it, you've watched a video, you've read an article, you've kind of looked at some charts, you've gone back and said, you know what, that makes a lot of sense. I'm going to trade that. How's the lowest risk way of trading it? Now, to me, it's like a balancing act, okay? You've got either you go super low risk and trade it in the smallest size possible and kind of see what the results are and get some real money results, or you go the other end of the scale and trade it full size straight away and see what happens. Now, for me, both of those aren't the right thing to do. Some will err on the cautious side and say, you know what, I should trade it in very low pounds per point if I'm trading a spread bet, very low position size, I'm trading futures, etc. You get the idea. But for me, that's kind of a little bit too tentative. I think if you're going to employ capital to a strategy, you should already have a good idea that that strategy is going to work. Now, you may not have intrinsic proof, you're never going to anyway. And by the way, even if you've got back-tested data, who's to say that the next 6 months are going to be out of sync with that back-test? You just don't know. You can't, there's no guarantees, and even if you have the most solid, logical argument for it, you never know. So even if you do have that, it makes no sense to go in a full boat or full clip on that trade. You've got to find the sweet spot for you. And again, I don't think it makes any sense to go in really small either, because if you're trading that, what other data are you going to get from it? Yeah, you might say, well, this works and that's the other. It kind of doesn't make sense to me. For me, the lowest risk way to test a strategy is to have a size on that is meaningful to you, but less meaningful than normal. That sounds like a load of waffle, right? But bear with me. If you normally trade, let's say we're spread betting here, spread betting channel. I know there's people from across the world are watching this, much appreciated, hi there. If you're trading, let's say you're trading £25 a point, right? And that's your normal position size, or let's use £10 a point for easy kind of calculations. £10 a point. If that's your normal position size, then this sort of size that you would test a new strategy out with would be something like £3 to £5 a point. So still useful. If you make profit at £3 a point, you normally do £10 a point. That's still useful, still a third of the return that you normally get on a strategy, but it's not so low that it's meaningless. It's not like it's 10p a point where it's almost like demo money, which to me means, I don't know about you, I don't know if you can help this or not, but human nature is that even if you go from demo to real money, you have to have some skin in the game. You're still going to have some meaningful skin in the game, or you don't have the feel of the strategy, right? If you're at 1p a point, it's talking about spread betting again here, but that's the same as like a one share. You just do not care what happens. The thing could rocket a treble in value. It wouldn't be any value to you whatsoever. But you start to come a little bit more meaningful into money that actually matters, i.e., hey, I'm risking X amount of money. Let's say you normally risk £500 on a trade. Now you're risking, say, £150 on a trade. That becomes more meaningful because you know that over time, if we get it right, that's going to work. But also you're going to watch it. And the trouble is when you trade too low and you go really low down, you don't watch it and you don't trade like a normal strategy, do you? You know it, I know, we've all been there. You've got such a small amount on, you don't care, you forget about the position. You don't trade it like you normally would, so it doesn't really get properly soak tested under pressure. Now, I don't think either you should go full clip straight away, because I think that it needs to prove its nuances. There's always a strategy, little nuances, little things, the tricks. Doesn't quite work on this market, works really well on here, time frames on this and that and the other. There's always some tweaks and adjustments you have to make, you know, just like, you know, if you, I don't know, build something and then you start it and it runs, and some sort of machine, you know, once you've started betting it in, you have to make tweaks and adjustments. Same with the trading strategy. but you need to actually give it real world money into it so that you can link with the strategy. That's the key point, guys, is there's the strategy. Both of you need to be able to mesh and operate and be profitable. This may well be profitable in the hands of someone else, and the same, you may be able to use other strategies, but how you two link together, which is why you need to have a meaningful amount of money on the line, but not a significant amount of money. And that's personal to you. You know yourself what's meaningful, what's significant, and what point in the middle. So the short answer to this is no, you don't go right down to the lowest possible size. Okay, and I'm talking really perhaps more to intermediate traders here who have a bank of strategies looking to add some more into the pot, rather than brand new beginners who are just kind of new to trading. The whole thing's brand new, in which case I always recommend starting very, very low. But if you're looking to add a tested trading strategy, don't go really, really low. Don't go really, really high. Find the sweet spot for you. Maybe it is a third of normal position size. Maybe it's a half of normal position size. Run it for a set period of time. For day trading, maybe 2 weeks is enough. If you're swing trading, it might have to be a quarter. You know yourself again with how you trade and how you need to do it. Then look at the results. So you almost say to yourself, hey, well, if I lose every single trade, I'm expecting X signals, 10 signals, say, let's say risking £100 per signal. I'm prepared to risk £1,000 to see how the strategy performs in the real world, or £10,000 or £100,000 or £100, depending on the order of magnitude of it doesn't really matter your account. So once you've done that, that's how you test the strategy. You put a meaningful amount in, but not too much. Then you get the results back of it. Then you assess and you go, okay, now it's been upgraded to normal position size strategy. I'm now going to trade it with my normal position size because I feel comfortable. I felt the nuances of it. I feel like it's easy to pull the trigger, because don't forget there's operational considerations, guys. Sometimes you might get a signal, but it might be too late. You might find it's tricky to pull the trigger on time. You might find that logistically it's hard to buy at the open. You get slippage or whatever the actual setup may be. So you have to take that into account, which of course, testing it for that specific amount of time will give you all that data. You can say, okay, I need to make these changes, these tweaks, that, and that means it will now be a strategy that I can use. I'll sign it off. Here's a documentation for it. Here's a standard operating procedures, whatever, or however you do it. Put it in your folder, and then you run with it. So lowest risk way to test a trading strategy isn't what you'd expect. It's somewhere in the middle. Let me know your thoughts on that, guys, in the comment section below. Otherwise, whatever you're doing, take care and keep your risk managed. Bye bye.